Hi again, everyone. Brian Rhodes here. Well, I trust all is well with you and yours today. Here we are, a few days from New Year's Eve 2018. I just came in from walking the dog. It's damn cold out there today, minus 17 degrees, and it's snowing. Funny thing about Torontonians, we don't get a lot of this type of weather here, like we've gotten over the last 10 days. And I've come to the conclusion that Torontonians spell snow shovel S-A-L-T. God, it's nuts what they do here with salt. They just throw it out and expect it all to melt, and just creates a slush pool of sidewalks and intersections. It's absolutely crazy and terrible for the dogs. So I've got to walk in the snow with my dog because she won't wear boots. Anyway, good exercise, but no sun today, so I'll have to wait for that till tomorrow. Well, enough of the weather, right? Look, I thought I had finished what I wanted to say about the volatility of Bitcoin and the cryptocurrencies markets, but you know, I've been reading a few reports and some of the hype from people out there who profess to be knowledgeable. I am very confident some of them are. And you know something, but there are a lot out there, quite frankly, who, you know, are guessing. Maybe they've got a crystal ball, I don't know. But, you know, when you get right down to it, you have to be careful because, you know, a lot of these things that you hear from, you know, investors, chart readers, and so on, is nothing more than self-fulfilling prophecy in many respects. You know, let me give you an example. You know, the chartists will look and say, okay, now you go way back to the history and it reached this point, got up to 3,000, then down to 2,000, then it goes up to 5,000, you know, then back to 3,000 and up to, and it goes on, but it's always the trend up. And they say, so what you can expect now is a little more of a drop, but then guess what? It's going to go to $30,000, Bitcoin I'm talking about, in the next few months. Well, okay, maybe sooner, for all I know. But again, interesting because it becomes a self-fulfilling prophecy. And it's not about the charts, it's about information. It's who controls the information, who's giving you the information, and how very much it is based on, you know, the dollar. In other words, these guys are giving you the hype, and they are believing, I'm sure, what they're saying, but you know what they're trying to do is develop a reputation for, you know, being able to give you indications of what's happening out there. But make no bones about it, it's about information. Let me give you an example of what I mean. If everyone out there had this thread of evidence, according to the chartists, that the next big jump for Bitcoin, the next big peak, is $30,000. If everybody knew that, and let's say everybody had money to invest, what would happen? Well, I'll tell you what would happen. Everybody would be buying in and buying in and buying in and buying in because everybody knows it's going up, right? But then what happens when it reaches its peak? Is anybody who's knowledgeable going to start buying past that point? When these people who are buying up now want to sell, why would they? Because it's going to go down. So you see, it's very fragile, and it's based on the information that's out there, right? The information that you have. Simple little things like that that you have to be aware of. You know, we're noted for in this industry of, you know, how should I put it? Buying the hype. I think it's, what's the phrase? Selling the news, buying the hype, right? Everybody plots all these things and tells us all these nice things, then we buy and then boom, bang, profit taking, right? Because most of us don't understand the concept of buying the hype, selling the news. Futures, good example, all right? Most of you don't know what futures are. I mean, I've got a little experience years back and whatnot, and I'm sure the market's changed it a little bit. And I don't have any real, you know, want to understand more about futures because it's not for me. You know, futures are for wealthy people for the most part, and or accredited investors. Accredited investor is where you have to prove to exchanges or whatnot that you can afford to lose, all right? So that's what the futures market is really about. If you've never invested in stock or you don't belong in futures. Again, I'm not an investment advisor. I'm just trying to give you some, how should I put it, some layman's understanding, common sense approach to a lot of this stuff, okay? But having said that, again, don't take what I say to be gospel. I mean, go and find out for yourself. But let me just give you an indication of how the futures hype may have contributed substantially to this sudden rise and then boom after, I guess it was the 10th and the 18th. I forget which futures exchange. Well, it'd be the CME exchange and the Chicago Board Options Exchange, I guess. I don't know which one was on the 10th and which one was on the 18th, but the fact of the matter is they released futures on both those boards. And everybody hyped it. But you see, the reality is, I think those who are in the know would realize that it's not going to make a big change in Bitcoin as some people professed it would. Because first of all, a simple little thing, nobody buys Bitcoin and sells Bitcoin in a futures market, right? They don't. Because there's, I forget what they call it, a cost settlement, I believe, because you buy on margin. So let's say you've got a Bitcoin worth $20,000, and let's say the margin required for that investment is, let's say, I don't know, $5,000. I'm sure it'd be higher than that for Bitcoin, but let's say $5,000. Well, what you have to do is, before you can invest in the futures, you have to put up $5,000. And you see, that doesn't require a purchase of a Bitcoin, not at all. What that does means that you're going to buy a contract, and I doubt very much they'll allow for in this case, shorting of Bitcoin, although I may be wrong. Shorting is where you sell at a higher price and buy at a lower price. And I don't think they'll do that at this point, but they may, but I'd be surprised if they did. Anyways, the idea is you buy a contract, and the contract states that, that you're going to buy a Bitcoin theoretically, because no Bitcoin is purchased, right? There's going to be a close on that contract. And let's say that it closes, that's where the cost settlement, I think it's called, comes into play. All that transpires here is you're up or down. If you were right by $1,000, it was going to go up, then you were given $1,000 out of that person's margin. And if you were wrong by $1,000, then you're going to have to give the other person $1,000. You're going to have $1,000 loss. They're going to have $1,000 gain. What that means, though, is then they can then take, and let's say the contract for the Bitcoin was at $14,000. They'll be able to take the $1,000 I'll be able to take the $1,000 that I got if I was on the upside of the exchange, and add to 14,000 that 1,000. So basically, I'm buying a Bitcoin only if I choose to. Once the cost settlement is completed and the contract is closed, I'll be able to buy a $15,000 Bitcoin by adding 14 of my own money in the $1,000 that I got. So it's only after the contract's close that you're actually maybe going to see purchases of Bitcoin. So futures in this case don't involve the actual buying and selling of Bitcoin. It's the idea of it being an investment opportunity, all right, for wealthy people, knowledgeable people, accredited investors, institutions and whatnot to make money. Will they make money on the exchange, futures exchange? I don't know. Time will tell. Hopefully they will, because if they do, then in fact we will see some major benefits to the to Bitcoin, I believe. I think we will see definitely an increase in equity, because some people will, after the exchange is, after the cost settlement is made, they will buy Bitcoin. I think that's true. I think futures will have a tendency to stabilize to some degree the pricing of Bitcoin. And I think it could lead to other options down the line that will also bring Bitcoin more into, in the investment world than it is now. Such things as, oh God, what do they call it? Well, I think it's called the Exchange Trading Fund, an ETF. I think that's right. Anyway, doesn't matter what it's called. It's basically an index. All right. Now that becomes interesting. Now that would be really something to see. If that happens with markets where they actually take an index and you can invest in the index. Think of a mutual fund. You've got all sorts of little investments within under the umbrella of a mutual fund. It could be the same for indexing in the cryptocurrencies. They could have, a little bit of Ether, a little bit of Verge, a little bit of DGB, a little bit of Lumia, a little bit of whatever, and so on, and they put it under umbrella, which means that it is again an opportunity, a huge opportunity in this case, for investors to take a piece of the action and in so doing mitigate some of the losses, because some will go up, some will go down, but the overall hopeful is up in an ETF, in an index fund. And the costs are less, the tax benefits are good, and of course you can buy on leverage again, and that's a very interesting aspect. This idea of the futures being able to buy on leverage, that is going to create some excitement around Bitcoin. Again, the hype, you got to be careful around the hype, all right, of Bitcoin and where it's going. One thing is sure, and it's this, that as the cryptocurrencies become more familiar to people out there, you will see a stabilization of price. There are mechanisms that will be put into place that will, in fact, give greater ability to determine the value. Remember what I said yesterday about difficulty to determining the value of this stuff because so much is flying all around? Well, that's one good thing about the exchanges, especially not so much the cryptocurrency exchanges, but that's what will really be good about some of the more seasoned exchanges out there, like CME or the Chicago Board Options. They and maybe NASDAQ. I'd love to see NASDAQ get involved in this, and they may very likely. That may be where the ETFs come into play. I don't know. But the fact of the matter is we're moving forward. But please, I don't see it as being this massive whack, Bitcoin may go up to $30,000. I don't know, but it's based on how many people are going to get the information that that's what everybody expects, you see? Everybody tries to put it out there. Everybody wants to put it out there because guess what side of the coin they're on, right? They're going to sell theirs at $29,000. So remember that. A little story and then I'll call it a day. I used to have fun going to the racetrack. I didn't bet a lot of money, but I had a few. Well, my biggest day was $4,400 I won. I only took $100 with me, I ever did. And of course, I probably spent a lot more than $4,400. But anyways, I kind of like the ponies. Not the thoroughbreds. I like the standardbreds, the ones with the little buggy behind them. Anyways, I would sit there and I would look at the racing reviews, and I'd go, this one's good in the mud and this one's not good in the mud. He won his last race. It was timing this and timing that. And I'm going, and I am just totally figuring this out and thinking that all I've got to do is apply all this information and bang, I've got it. Until, I was talking to a trainer one day who was introduced to me by a friend. And so we were talking kind of candidly. And, I found out that there were no telephones, cell phones, at this time telephones, no cell phones, in the stables at the track. And there was no communication between the stables and anyone anywhere. And the reason for that was, generally speaking, the drivers and the trainers in that stable would go about and they'd kind of fix the race. I'm not saying it happened every time, but they would actually determine who was going to go for it that day and who wasn't. And as long as the public didn't know, I guess it was fine. but it didn't say much for gathering all the information and becoming a student of the racing form. No, it wasn't. So, they would say things like, oh, my horse has got a sore foot today. I'm not going to push him. I need him to rest a bit. Or, no, we're not going to go for it today. We're going to wait a couple more races, get her a little more strength, and then we'll go for it. So, if you want it, today's your day, and blah, blah, blah. That's the talk, apparently, that went on. So anyway, again, information is the key. Those who guard the information, have the information, are in the driver's seat, right? The hypesters and whatnot are usually those people who are the puppets of the people in the seats. And they are applauded by those people, especially if they give information that is to the people behind the curtain, the Wizards of Oz behind the curtains, because, of course, they're shilling for them, and they might not even know it, okay? So be careful. Be careful, especially now, but things will improve. Okay, now next blog, I promise, I'll be talking about the blockchain. I get too excited about all this future stuff and investment stuff. It drives me nuts most of the time. Anyway, that's it for today. Take care. I hope you have a great rest of the day. And if I don't see you before New Year's Eve, have a great evening and a wonderful first breath on the new year. Okay? Bye-bye now.